Good morning. Welcome to Forex In Four. Today is Tuesday, August 30th, 2011. I'm just back from the old hurricane evacuation back here in New York City, where things seem to be all right. But just want to say my heart goes out to those who've been affected by this hurricane, and I hope everybody's able to get back to normal as quick as possible. So that being said, let's kind of jump into the markets here and see what's happening. I didn't talk to you yesterday, but basically what happened last week with Bernanke's speech on Friday, it left the market sort of wanting for more, and like I said prior to that speech, that may have been a good thing. So what we saw yesterday, markets were in pretty much risk-taking mode. We had stock indices way higher, and we were getting some news that was potentially positive out of the Eurozone. Well, this morning we're giving back a little bit of those gains, and I think we're going to see a lot of this happening. Is that we're going to see the U.S. session perhaps where things are a little bit more positive, and then the European session where things are a little bit more negative. So we're just looking at the euro here, and you can see that euro's bounced higher, got up to the first resistance area on pivot points. All right, just up at 145.50. All right, you can see it held that slight double top, and now here we are selling off a little bit. We're sitting just up above 144. Okay, but I'm not certain that this is a good bottom here. All right, you can see stochastic starting to roll over, so we may actually retest this next area of support down here at say 143.40 area, which also looks to be some previous support as well. Now what have we got going on? Well, the economic data isn't a ton today, but in the Eurozone we had the business economic climate indicator. There are basically three indicators: business climate, economic confidence, and consumer confidence, and those all came in lower than expected. Actually, the consumer confidence came in just about even, but we're starting to see industrial confidence lower. Okay, industrial zone, Eurozone confidence, services lower. Okay, apparently Italian business confidence is better though, so I guess that's a good thing. But you can see the confidence is starting to come in a little bit lower, and that's one of the things that it can be sometimes forward-looking, but it can also be backward-looking. Now, the markets are actually waiting on the U.S. Consumer confidence later this morning. All right, and then we also have U.S. home prices coming out, which are probably going to come in a little bit lower than expected. So right now we're talking about confidence in the marketplace, and I think that's one of the things that's severely lacking. Okay, when you look at the economic data, when it comes in and it's somewhat negative, you just don't get the feeling that things are getting better. So as you're less confident, you're less likely to act, and it sort of self-perpetuates itself into a downward economic cycle. So that's sort of what we're seeing here. So we're looking at the Eurozone on the 15-minute chart, sitting just up above 144, psychological support. If U.S. consumer confidence comes in worse than expected, then I think we could maybe see a greater flight to safety on risk aversion. All right, let's take a look at some of these other pairs here. So a quick peek at the pound. Pound is also lower. All right, in the UK, they had their mortgage approvals came in just a little bit better than expected, but right now we're starting to see a little bit of dollar strength on the news of what's going on in the Eurozone. So the pound has been performing fairly well, and we can back this out a little bit. Let's look at this on the 2-hour chart. All right, you can see we're up here just above 165. We're pulling back a little bit. All right, and it looks like now maybe we want to start retesting these ranges. All right, the Eurozone debt crisis is really what's sort of going to be driving the markets for a little while now, and it's going to be interesting to see if we're going to continue to trade this range, if we come back, retest these lows. All right, and if we just bounce around for a little bit. But there's some questions going on in the Eurozone. Norway is asking for collateral for Greek bailout. Now we're hearing that perhaps Chancellor Merkel doesn't have enough votes to ratify the deal that they came to back on July 21st. So she's facing a lot of political pressure in Germany, and we're going to have to see exactly what happens there. So things aren't looking so tight for Eurozone, and when that happens, that means dollar strength, flight to safety. All right, we can also look at the Japanese yen here. I don't know, let's look at it. It's just dollar yen. And you can see that we're still sitting here sort of trading in this range here. All right, we're above 160, 76.83. All right, just under 77 here. So that dollar yen sort of trading around. As long as dollar yen doesn't decline decline faster, meaning the yen doesn't appreciate versus dollar, then you're not going to hear as much about the intervention talk that we had been hearing before. Now, overnight, Japanese retail trade figures came in lower than expected, although retail sales figures were a little bit better than expected. And lastly, the jobless rate ticked up slightly to 4.7% from 4.6%. So wasn't looking so swell there. And to show you overnight, the New Zealand dollar, the Kiwi, where is it? Kiwi. There we go. It was actually higher overnight. It's pulling back just a little bit. Okay, they had a release of building permits figures. All right, and those came in better than expected. Okay, they increased 13%. Last month it was a decline, so shows there's some economic activity going on in New Zealand. All right, but I think we may see a little bit more of the same. As I've mentioned, you get these cycles that happen in the market. So right now, problems seem to be coming from the eurozone. So it looks like we're going to push higher in the U.S. session. All right, we're going to get a little bit of carryover to the Asian session. All right, and then Europe opens, and then things look sort of gloomy, so it sort of sells off. So I think we're going to see these ranges happening, but the commodity currencies right now, especially Kiwi, still sitting up here above 20 period moving average, as well as the Aussie. All right, they look to be moving a bit higher here. So just slight little pullbacks, and we're going to see how that happens. But later this week, we're going to get the granddaddy of them all, the U.S. non-farm payrolls report. Okay, that's going to be a big number coming out, and we'll discuss that more as the week goes on. There's a lot, I'm trying to play catch up this morning. I can't get to everything right out of the gate. But we're going to see U.S. non-farm payrolls report on Friday, and that's going to give us a better idea of what's really going on. So, for now, let's just sort of ease into the markets. You can sort of see that it's really based on what's going on in Europe and consumer sentiment here, and what's going to happen with the stock market. I mean, right now, I think the market's going to learn to live without the additional stimulus from Bernanke. Okay, and maybe that's a good thing. All right, he didn't stimulate more, that we don't have this massive inflation. So, maybe this is a time when stocks can still do well, and we're going to have to see. But, it's hard to, for people to park their money in fixed income right now because, interest is so low here in the U.S. So speaking about treasuries, all right, you don't know where you're going to put money in European bonds because, a large portion of the periphery is in potential danger. Right, you're talking about municipal problems here in the U.S. So bonds aren't as safe as everybody wants to think, and it's the kind of thing where maybe good high dividend paying stocks are gonna drive the train, so to speak. So that's kind of what we're looking at today. Let's keep an eye on this U.S. Consumer Confidence figure and see if that's going to flip the markets here from a little bit of risk aversion onto risk taking. So that's what I've got, folks. Good trading to all.